Now let's turn to Suzanne Bishopric, who's a Canadian citizen, so she comes from a country which is famous for its large and sophisticated public pension funds. But she also was, before co-founding Global Sovereign Advisors, she also was for many years the chief investment officer of the UN Joint Staff Pension Fund. So she has a, I would say, global supranational pension fund perspective and experience. And of course, many members of the UN are these 54 African states. So you could say that she was on both sides of the fence, and I think it's going to be fascinating to hear what she has to say about the issue of co-investment.
Yes, and thank you. That was a kind introduction, but just to complicate the DNA picture, my Montreal family arrived via my ancestors who were from Tripoli, now in Libya. So I have my African side too. But I really was fascinated by the discussion about co-investment because I actually looked at a study over a year ago about co-investing by Canadian and US pension funds. And not just in Africa, but global co-investments really have a wide distribution of results. And unfortunately, a lot of the infrastructure and co-investment deals that were taken outside of large funds didn't work out very well. So my advice is if you're going into Africa or other international investments and looking at co-investment, you're better off with a diversified portfolio. Go with the fund manager who has lots of different projects, but don't buy into the supersized one. If a deal is too big to fit with the regular partnership arrangement, there's a reason for it, and exercise caution. Infrastructure, for those of us who live in New York now, it has some warning signals. It's a low return government rate of return, but high risk. I'm living very near the 2nd Avenue subway, which has been under construction for nearly 100 years. So there is political risk, and it's not always because the local atmosphere isn't pleasant. I think New York is a wonderful place to live. I've enjoyed it, almost as nice as Montreal. But this subway still is not built. So be very careful. But Africa really is a unique growth story now, with 50% of the African population under 25 years of age. Economic growth is imperative, and so far so good. For the past decade, sub-Saharan economies have been growing above 5% per year, and investors have been rewarded. When I was at the UN Pension Fund, we were lucky to be able to invest in some private equity deals, even though many of our pensioners, who tend to be very vocal about where the chief investment officer invests their money, they were a bit concerned about our investments in some of the banks that were on the panel a few minutes ago. They said, "You're investing in Nigerian banks? That sounds really scary." Now, suddenly, it's a motherhood statement. And I thank you for generating the wonderful returns, because now, as a retired UN pensioner, I'm living off of them. But we must keep the risks in mind. Commodity prices have been weakening, and with 87% of government expenditures derived from commodity exports, and not just petroleum, this has already put some pressure on certain budgets. This week's news about Volkswagen's pollution controls, or lack thereof, has put sharp downward pressure on platinum, a key element in catalytic converters. So there are recent budget and reserve management challenges that we all have to be very painfully aware of, and they're being handled differently. Kenya has raised interest rates to support the shilling, and Egypt has taken steps to reduce the ability of foreign investors to repatriate earnings. So these are things we have to be mindful of, and unfortunately, I think the rating agencies are always slow, both to pick up the good news as well as to warn us of things that might be developing. So where do you invest in Africa today if you have a really long-term perspective? I would look very closely at the spirit of cooperation that's going on with the June 15th announcement of the tripartite free trade area. The TFTA will bring together 26 member states, more than half of Africa, creating many sound investment opportunities. Facilitating cross-border trade within Africa will enhance growth prospects, not just for traditional commodities and manufactured goods, but for some cutting-edge financial innovations. Infrastructure needs are significant, but as in other entrepreneurial ventures, necessity is the mother of invention. Speaking of successful African inventions, focus on different solutions, such as M-Pesa, software which allows payments on phones in Kenya. And this is expanding into other countries and other types of technologies. The USA's Apple Pay is a Johnny-come-lately. Now, I expect to see many further surprises for software developers in this world, with rapid innovation occurring to ensure payments and data security on telephone systems in Africa. And I'm looking closely at some security products coming out of South Africa today. My start with African investment was backwards. I heard people in the last panel talking about the dominance of South Africa. My first boss at the United Nations was Kofi Annan, and he warned me about the very important boycott of any South African financial institutions. So we were everywhere else in Africa until more recently. And a historical perspective is appropriate to see how far we have all come. This is just a wonderful tribute, not just to Africa, but what the investment creativity has done. Now, on this day in 1962, Algeria declared its independence from France, and the CFA franc, which was Colonie Française d'Afrique, that was launched in 1945 to protect African colonies from the devaluation of the French franc. Now, the French franc is no more, but all CFA zone members, and there are two different groups, still have to pool together about 65% of their reserves into an operations account at the French Treasury. Now, that's a lot of assets to outsource to a single fund manager, whether it's to another central bank or to Wall Street. Now, I hope the performance has been good, but even so, after this many years, it might be a good time to revisit the terms and conditions. Moreover, since France joined the euro, the CFA linkage to the euro now binds exchange rates and monetary policy in 14 African countries to Europe's internal politics, including Greek debt negotiation and Great Britain's vote on the EU. Now, ties between Europe and Africa remain robust, but more investment now is coming from China and the USA. And the diversification of reserves should give due emphasis to these investment implications. So a reform of the currency arrangements, such as was advocated recently by the African Development Bank, might be a further catalyst for growth. And we're going to be monitoring these developments because I think the French-speaking side has some catching up to do. And I think that's you know, it's going to happen at some point, and we're ready for it. Thank you.
Thank you. I mean, I'm personally part of the French-speaking side, but I'm agnostic. I'm agnostic on the issue. I think there are pros and cons.
Well,
So
from Montreal, we have to look at the French-speaking side.
Doing business in Africa, you can't afford to be without Africa Investor.